SVB, plays a critical role in the entrepreneurial ecosystem of this country, but the level of innovation hasn't stopped at all. There are really exciting companies across all industries, and especially you mentioned OpenAI, where we actually were the first venture investor in that company. That has led to a lot of excitement in the generative AI space. We've always been at the forefront of sustainability and renewable energy investing, and we're seeing lots of activity there as well. So that activity hasn't slowed down at all. The bank provides a lot of services, but in terms of the entrepreneurial ecosystem, that's as vibrant as ever.
Last week, venture investor Samir Kaul joined us with a positive outlook for startups and VC landscape in the wake of SVB's failure. And just last night, First Citizens Bank announced they're acquiring a portion of SVB. Our next guest says firms have yet to fully reckon with the impact of the collapse. Joining me now is Sam Yagan, co-founder and managing director of Corazon Capital. Thank you so much for joining me today. So in terms of the sunny outlook there that we got from Samir, are you also seeing that reflected?
I think there's a big difference between what's happening in startups and how those startups get funded. And I think he's exactly right that the founders in the startup ecosystem are as innovative as ever, and there are great companies that are being built as we speak. The problem that SVB brought is that those companies are not going to have as much access to capital. They're going to raise much less money at much worse valuations, and those founders are going to be much more diluted as they build those businesses.
So then how much of a difference now does it make with First Citizens Bank here stepping in with that buyout of large parts of SVB?
It's a great question. Are they going to be active in the startup ecosystem? SVB over decades built a reputation and relationships as being the single most active player in the banking category for startups. First Citizens doesn't have that same track record. They've obviously acquired the bank. What is their posture going to be toward these relatively risky startup investments? I don't know what they're going to do, and I don't think they've really said what their position is going to be.
And it doesn't sound like you believe the worst of the repercussions when it comes to venture capital and sort of venture debt is behind us. What do you think does lie ahead then?
There is effectively no venture debt market right now. What had already been a slowing market, the SVB collapse just slammed the brakes. We are seeing almost no deal flow. What does that mean? That means an entire asset class for startups is currently unavailable. There is effectively no venture debt. So where you might have gone out to get a loan to fund your inventory or your growth, you now have to go get very expensive equity from venture capitalists. Now, the venture capitalists themselves, I think, have not yet fully had their day of reckoning in that they're still carrying those valuations from the heyday back over a year ago, and they have not fully priced into their own balance sheets and their own numbers what the new market reflects on those valuations.
So then some of the rebounds that we're seeing at the moment for regional banks and for the major banks as well, should we sort of take that with a grain of salt then at the moment?
I think when you think about the impact on the startup ecosystem, they're pretty disparate, meaning the regional bank stocks and this acquisition of SVB, how those will impact startups' ability to access venture debt, I think are totally unrelated. But again, we have all these founders building great businesses. And the question is, how are they going to capitalize their businesses and what new players are going to step into the void that SVB's collapse has given the market?
And so then in terms of solutions, is it about more government regulation or more government intervention when it comes to stemming some of the longer term risks and contagion when it comes to venture debt?
I think with the government stepping in and securing all the deposits, I think they certainly gave the market the stability that it needed. I think when it comes to venture debt itself, that's much more a question of how much risk are these banks willing to take when it comes to backing these startups that don't have the track record that a lot of the public companies have.
That certainly did put SVB in a very unique position here in that community. A big thank you there, Sam Yagan there, Corazon Capital co-founder, for joining us this morning.